Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Okay, so we're starting the holiday week. Everybody had yesterday, markets were closed. Monday was President's Day. So let's see what the markets have in store for us now. Well, equity markets are in a confirmed uptrend right now. And the reason I say that is last Friday, the NASDAQ closed at a new 13-week high. The S&P 500 closed above a 50-day moving average, as did the Dow. The Dow and the S&P 500 are lagging, but the NASDAQ looks very strong, and the leading stocks continue to power higher. Now, if we take a look at the leading sectors in the NASDAQ, it's still related to the medical sector, specifically drugs and biotech stocks. Internet space is doing very well as well. The software sector is doing very well. The leisure space is doing very well. And we're seeing a little bit pickup in the energy sector. So for now, this week, we're saying the market is in a confirmed uptrend. Now, speaking of biotech stocks, I'd like to talk about two biotech stocks that we pretty much have our eye on. Okay, one of them is called Biotech. It just went public in September. The symbol is OPHT. And let me tell you the reasons why I like it first from a fundamental view. What they make is a drug. They have a drug called Flovista that is it's made to treat wet age-related macular degeneration, which is an eye disease. And their drug is what's called an antiplatelet-derived growth factor. Now, what makes this whole thing interesting, it's a little bit of a long story here, so bear with me here, is the standard of care for treating wet age-related macular degeneration is through what's called anti-vascular endothelial growth factors. The lead drugs in this are from Regeneron. Their lead drug is Eylea. Other drugs used in this space are from Roche's drugs. Genentech is Avastin and Lucentis. Now, what this drug is, it's slightly different, and it's made to use as an adjunct. So right now, it's in clinical trials. They're entering phase 3 clinical trials. The phase 2 trials showed very good results that this anti-plasma-derived growth factor works very well with the other drugs that are currently being used, which are the anti-vascular endothelial growth factors. So what really makes this company interesting is the founders of this company and the ones that are bringing this drug to the market are the same people who were involved in iTech, which was subsequently bought by Valiant Pharmaceutics. But anyways, they brought the drug Macugen to the market, and Macugen was the first anti-vascular endothelial growth factor drug. So you kind of see it gets a little complicated here. But now what also makes this interesting is Regeneron, who has the lead in this space with their drug Eylea, is also in January announced that they signed a pact with Bayer Healthcare to also develop their own plasma-derived growth factor drug. Okay, now I can send this all to your report. You send me an email at gtkachuk@rcmfs.com, and I'll send you my complete report on this company. So anyway, so why I like the company. Okay, OPHT doesn't make any money. However, it came IPO in September, did form a classic cup with handle base, and broke through the $33 level last week. It's trading right around $35. I wouldn't chase it past 35. But also, prior week, it did a secondary where it was priced at $31.50, and it was very well absorbed by the market. So it's, of course, risky because we don't know how the trials will go. We don't know if the company will become successful. But as young biotechs who aren't making money, you can trade them technically. So you have your pivot point at about $33.50, buy it up to $35. It should hold that $31.50 area where they did the secondary. Now, if it fails there, all bets are off, and we'll have to see what the future holds for us forward. Now, Regeneron, the one I'm talking about, that has the lead with Eylea, their main drug, is announced earnings last week, and they broke through a $319 price level because the drug's pretty much being a blockbuster. They came in at 51% earnings increase and a 47% revenue increase. So you want to keep your eyes on both these companies. You can play them both here, but as always, the biotech space is always for the most aggressive investors. It's a very tricky thing. You need to trade it very cautiously, but those are trades worth trying in this environment. The medical sector is doing very well. This morning we got news that Actavis, a generic drug maker, is buying Forest Labs, another drug maker, and both those stocks are rocketing, and that's kind of the environment we're in right now. So as always, don't take my word for it. Let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.